Welcome to this special place that is particularly meaningful for our purpose today, for it used to be a printing house, quite symbolic for banking. Today, the world looks very different, and we are much more closely bound together. For one thing, as the health of one economy has direct impact on the vitality of the markets all around it. We are stronger when we come to the conferences like this one to learn, exchange, share best practices, and plan for the future. Yet, some things do not change. Businesses need money, and banks need businesses. At EFSE and GGF, it is our mission to support the conducive environment for this exchange to take place by promoting impact investments, especially in local currency. We support health for both banks and businesses and keep the engine of the economy running. That's why we are proud to work together with financial institutions in Georgia to jointly foster long-term sustainable economic growth in the country and beyond. With EFSE, we started activities in the country back in 2010. Since then, we have been continuously investing in the ability of financial sector to serve micro and small enterprises, as well as low-income households. All in all, a strong 315 million euro of dedicated financing was provided by EFSE to local financial institutions. It is actually the largest national exposure of the fund in the Eastern European neighborhood region, with a solid 41% market share. Notably, since 2017, EFSE is providing financing in local currency, which has significantly accelerated starting 2019, thanks to extraordinary contribution to the European Union and the German Federal Ministry for Economic Development and Cooperation. To date, EFSE has provided more than 50 million euro equivalent in GEL and is set to further increase this, reaffirming its distinctive role as a market enabler, facilitator, and long-standing partner. This very cause of promoting sustainable financing and sustainable economic growth is what brings us today here together. Providing financing to our communities, especially in local currency, is key to safeguarding the aspirations of people, economies, and also investors. Let us make most of our gatherings today to learn from each other's experiences. Let's get it started. Let me proudly invite Dr. Klaus Müller, the chairman of EFSE's board of directors, to share his view and vision of the EFSE's role and the importance of local currency lending, driving impact investing. Dear chairman, a very warm welcome. The floor is yours.
Yeah, good morning from Frankfurt, dear guests and friends of EFSE. It's a great pleasure for me as chairperson of EFSE to welcome you to today's event, Two Sides of the Coin, the currency debate. I'm also very happy to see that at least partly the event is taking place in person. Olaf and me certainly had wished to be in Tiflis as well, especially seeing all the nice bakery in the introductory video, which I think we will see later on. But I hope in the coming month also the in-person share of this kind of events will increase. Certainly also a very special welcome to our two guests of honor debating today, the governor of the National Bank of Georgia, Mr. Kope Kvenitadze, as well as the CEO at Policy and Management Consulting, Alexei Alexishvili. And certainly I'm also very happy to be joined by one of our major donors, the EU Commission. So also a very special welcome to Mr. Haubin Achemian, the head of Sector Economic Development and Digital Eastern Partnership from DG NEAR. The last 2 years have been particularly hard for all of us, but I think we also know that these 2 years have been particularly hard for small and micro enterprises. These enterprises had to bear the brunt of the economic burden created by the pandemic, and we also all know that micro and small enterprises are the backbone of economies worldwide. They are the creator of employment, and this is especially true for the economies of Southeast Europe and the European Eastern Neighborhood region. Therefore, for EFSE, as a long-standing partner of micro and small enterprises in the region, we as EFSE made extra efforts during the difficult times of the corona pandemic to support micro and small enterprises, both with tailor-made finance as well as with technical assistance. And at the height of the corona pandemic in 2020 alone, EFSE approved a record of 2,079 million euro to key financial partners in order to support entrepreneurs in the region to build resilience during the crisis. And it's even, I think, more impressive if you go one layer down on the impact side with these 279 million euro, 440,000 new loans were facilitated to micro and small enterprises, to households, and it helped to maintain nearly 91,000 jobs. And I'm confident as we move forward in the year 2021 that we will maintain or even exceed this high level of funding and employment generation and maintenance. Facilitating these resources in local currency has always been a key of the mission of EFSE to responsible finance. And in 2020, 75% of EFSE facilitated loans to rural and MSEs borrowers were provided in local currency. This has been a record. There's been the highest number of local currency loans ever be provided in a single year through EFSE funding. Lending in local currency is important to safeguard the cash flows from the risk of exchange rate fluctuations, and I think we all know that this was particularly important in 2020 when we saw very high currency depreciations, especially also in the region of the European Eastern Neighborhood. And for large investors, maybe we are familiar with this kind of foreign exchange risk, but for small enterprises, for a small enterprise who has financed its business future through a loan in foreign currency, we know that even slight fluctuations in the exchange rate can make or break the viability of the business. But allow me also to turn to our host today, our partners in Georgia, which are particularly committed to our shared mission of promoting sustainable entrepreneurship. Almost 15% of EFSE's portfolio is currently invested in Georgia, and out of this, 35% is provided by EFSE in Georgian lari. And with this funding, altogether 11,400 tailor-made loans have been facilitated in the last 12 months. And I think the important part is also that 95% of these loans to MSEs and households were made in local currency. So this is a figure even higher than the average I stated before. And certainly I'm extremely happy that today we are signing 2 new agreements for local currency funding in Georgia with TBC Bank, a long-standing partner of EFSE, as well as with TBC Leasing, which is a new partner of EFSE. So dear guests and friends of EFSE, this event today highlights the efforts of EFSE, our partner fund GGF, and its major donors, the EU and the German Federal Ministry of Economic Cooperation and Development, to amplify the impacts and also the outreach of MSE financing by spreading the awareness of the power of local currency financing in the region. And I'm very confident that together we can contribute to a more resilient and more sustainable economy post the pandemic, not only in Georgia, but throughout the region. So it's a great pleasure to attend this event today. And on that note, let me hand over to my dear colleague Olaf Zemelka, the chairperson of the board of the Green for Growth Fund.
Thanks a lot. Thanks a lot, dear Klaus, for joining and addressing us today. Much appreciated. Dear guests, let me proudly acknowledge that today's event is organized with partnership Green for Growth Fund. GGF is an impact investment fund mitigating climate change and promoting sustainable economic growth by investing in measures reducing energy consumption, CO2 emission, and resource use. Similar to EFSE, GGF is keen to provide its partner institutions with access to local currency finance for green investments and thus help businesses and households to mitigate the climate change. GGF is active in Georgia since 2014 and since then has made almost 150 million euro investment, contributing to reducing over 57,000 tons of carbon emissions per year. It is notable to mention that in this period, GGF has dispersed almost 20 million euro in Georgian lari, which is the largest exposure in a local currency at portfolio level. Moreover, it is always encouraging to see a strong involvement and engagement locally, with National Bank of Georgia yet again playing a role model in the country and also in the region. It is a member of the Sustainable Banking Network and undertakes significant efforts to promote green finance taxonomy. And GGF is always keen to join local initiatives and contribute at maximum. Let me proudly invite on stage Mr. Olaf Zimelka, the chairman of the GGF Board of Directors. Dear Olaf, very warm welcome. The floor is yours.
Thank you very much, Ivana. You said everything already, so I can make it short. Greetings to Tbilisi from Frankfurt. Yeah, I wish to be with you in Tbilisi today, and I'm sorry not to attend this meeting, yesterday's event, yesterday evening's dinner. But I think meanwhile, over the last 18 months, we have obtained enough experience to have such a great event in presence. To echo the sentiments to my dear colleague and my partner from the EFSA side. And I would like also to say hello to the governor, to Alexis. Thank you for having this event together with us. I think we are all looking forward to a promising and engaging discussion on local currency, which I believe is crucial for generating positive environment and social impact in this region. But first, I think, please allow me to express my gratitudes and my pleasure of the attendance of Robin from the EU Commission, from DG NEAR. We're very much grateful about the continued support of the EU Commission, which is enable us to provide green financing to our local partners and in local currency as well over the last few years. And as a green fund, we are very proud to partner with the like-minded institutions like TBC Bank, Bank of Georgia, ProCredit Bank, Basis Bank, Credo Bank Crystal, and TBC Leasing, among others, which we teamed up, and you are definitely an integral part of our mission to achieve sustainable economic growth, but also to reach tangible green investments in the Eastern European neighborhood region. Following the EFSA footstep, the GGF created also a local currency window in 2020 to improve the access of green financing in local currency. And I feel that our decision in 2019, we made the decision in 2019 and the implementation started in 2020, was a very, very good decision. But looking to the entire portfolio, since 2012, the GGF invested more than 310 million euros in the ENR East region, investments which have unleashed positive green growth for business and households. And looking back to the turbulent 18 months in the past, this played an important role in delivering the so-called now green recovery. We have seen how local currency investments spur green investment, helping businesses and households to invest in green technologies. As such, as we would like to think the pandemic is over, it will take time yet for real recovery to occur. Now I have the honor to welcome the Governor, Gvene Tatze, Chairman of the Board of the National Bank of Georgia. And Governor, I really express my gratitude and my thank you to you for this great cooperation with you. And Alexis Alexashvili, Chairman of the Board and CEO at the Policy and Management Consulting. I think two esteemed experts in the industry in your country who will debate on the topic of local currency. So without further ado, thank you very much. Thank you for coming to this event, and I'm very much looking forward to our discussion on local currency.
Many thanks, dear Olaf, for joining and addressing us today. Highly appreciate it. All these remarkable achievements of EFSA and GGF wouldn't have been possible without continuous, tireless support of our investors, including European Union and the German Federal Ministry for Economic Development and Cooperation. We are excited and extremely grateful to have today here with us Mr. Bernard Schembri, Program Manager, European Commission. Dear Bernard, welcome to Tbilisi. The floor is yours.
Hello everyone, thank you very much. Indeed, the EU is very proud to be part of these wonderful results that we had with the EFSA and GGF. And I'm really proud and happy to be here in Tbilisi this week. I'm here with a big team of colleagues from Brussels in Tbilisi, in Georgia this week, to work on the EU economic and investment plan for the region. And we have ambitious targets for the region and especially for Georgia. And one of the big targets we have for the region is to help SMEs, especially small SMEs, as we are doing through EFSA and GGF. And we want to help these SMEs, the economy of the region, to do the green and digital transition. And we want to invest in this country by mobilizing private funding through our intervention. So we can see how important it is for us to work with partners like EFSA and GGF. These are key partners to achieve our targets. And we are doing so for many years for now. I think maybe we started 15 years ago in other countries when EFSA started in other regions of the world. And we are happy to continue this cooperation. And we did it particularly during COVID-19 time. We adapted our support. EFSA and GGF were really important in the reaction of the crisis, especially in Georgia. And I think we can say that through our joint activity, we avoided the liquidity crisis, which is also important for us as we are speaking about currency today. I want also specifically to mention on green that, especially with Green for Growth Fund, that it's important for us to work with EFSA and GGF because it can show that green and competitiveness are in a way also two sides of the same coin. And we can work on growth and green and environment and climate and sustainable economy. And this is very important for us. And of course, SMEs are facing many challenges in Georgia and in other countries. And one of the big challenges is access to finance for local currency. And as we want to support SMEs, it's a big target for us. We will debate today on all the aspects of this issue, but for the European Union, it's really important because it's providing local currency financing. It's helping at the institutional level, but also at the individual level. And through that, we can achieve key targets of our economic investment plan by doing a sustainable growth, an economic growth, but also strengthening institutions and financing institutions here. So we are really happy to be a part of this journey together. We will continue, and thank you for the invitation.
Many thanks, dear Bernard, and special thanks for your continuous support that the European Union is providing to EFSA and GGF in Georgia and also in the wider region to build a strong, inclusive economies for people's prosperity and, importantly, to better manage foreign currency risk and reducing its volatility. However, it is still challenging in smaller markets, including Georgia, while businesses and households are facing trade-off between choosing borrowing costs and exposure to foreign currency risk. Usually, and quite often, businesses and the households are unfavorably comparing borrowing rates for foreign currencies, which are typically lower to local currency, and believe that it would be cheaper to borrow in dollars or euros. This could leave them vulnerable to economic shocks and local currency depreciation that can wipe out any benefits that could lower interest rate can have and lead to difficulties in repaying the loan. We have asked a few Georgians how they are approaching this matter, and this is what we learned.
Local currency financing allows people to invest in their future free from foreign exchange rate risks. Ultimately, it fosters the development of a competitive market economy. But how does this work in practice? Let's hear from entrepreneurs talk about their experience with local currency financing.
Our company has a startup loan in Georgian lari.
My mortgage loan comes in Georgian lari, so the local currency.
I have my corporate loan in US dollars. The reason for this is that my revenue stream comes from export revenue.
Since the currency exchange rate is not stable in our country and our company carry out all transactions in Georgian lari, thus it's very important to have a loan in Georgian lari.
Well, to take the loan in a local currency may have several implications. On the one hand, the reimbursement or income comes in Georgian lari, and on the other hand, you anticipate some of the potential fluctuations of the interest rate on the market, and particularly in the terms of COVID-19 recent crisis.
Local currency financing is very important for small to medium sized businesses which have revenue stream in Georgian lari.
I would ask them about the reason why they do not support Georgian startup, because I reckon this is crucial for the development of the country.
Well, my question towards them might be whether they are subject of the same terms in terms of interest rate as the general public, and by how much their loan and interest rate on their loans have been jumped, let's say, in the recent 1-2 years.
How to reduce financing costs in Georgian lari, and how to optimize debt to equity ratio.
What is the underlying factor for entrepreneurs when deciding which currency to choose when taking out a loan? Is it to do with the type of loan, tenor, business model, and what role do financial institutions play? Let's dig deeper into the intricacies of local currency finance and hear from industry experts explore this topic further. Welcome to Two Sides of the Coin, the currency debate.
Well, quite some insights. Let us take it up to discussion and debate. For this, I would like to welcome on stage our esteemed guest, Danae Kyriakopoulou, Senior Policy Fellow at the London School of Economics and Political Science. Dear Danae, it's an honor to have you here with us. The floor is yours.
Thank you very much. It's a real pleasure to be here, and congratulations also to the teams at EFSA and Green for Growth Fund for putting this together. I think we all feel very lucky after such a long time of connecting through Zoom to be able to be here in person. So really well done to the team for all the preparations they've done. It's my pleasure to open the debates today, and we've seen how dollarization and currency matters are something that is affecting entrepreneurs, people, households in everyday life. So it's a matter for everyone in the economy. To give some context on dollarization and how it arises, it's something that usually stems from high volatility in the local currency and starts by confidence in the store of value that a currency can provide, moving to currencies that are more stable, such as the dollar. And these are the origins of dollarization in many economies. Now, the problem is that it's usually quite sticky. So even when inflation, for example, becomes more stable, dollarization rates still persist and are quite high. It doesn't mean that it's impossible to become less dependent on dollarization, and some countries have managed to do it less successfully and others more successfully. Poland, Israel, Peru, Bolivia are all examples of efforts to reduce dollarization. But it can also take many forms. So there can be financial dollarization, looking at the currency and the store of value, but there can also be dollarization in terms of the loans that households and businesses take, which is the forms that also take place in Georgia. Why can dollarization be an issue when inflation, macroeconomic conditions become more stable, where, well, it reduces to some extent the effectiveness of monetary policy, the transmission mechanism of interest rate, and it can also be a risk, as we saw in the examples of the video, for having loans in foreign currency when there is exchange rate volatility. Issuing debt in local currency as well, issuing it in foreign currency can have its advantages because it can help attract foreign investment, but issuing bonds in local currency can also help hedge against that risk, because if the exchange rate depreciates, then the debt burden would be high at the same time as a negative economic shock can hit. So for all these reasons, there may be opportunities and there may be goals to reduce the rate of dollarization in a country, as has happened elsewhere. And there can be different ways to do that. In Georgia, the process of dollarization has taken place over a number of years now. And there can be different ways to do that. So you can see here, the chart starts in January 2004, going up to now, de-dollarization measures really starting around the time of 2006 or so, and from 2010, seeing some measures on the macroeconomic side. So there's different tools in the toolbox, let's say. One category would be macroeconomic aspects that are affecting dollarization, so inflation targets, for example, with foreign exchange flexibility, as is something that was introduced in 2010, already a little bit before. There can also be microeconomic measures, for example, increasing differential costs of financial intermediation in one currency relative to the other, placing quantitative limits on local intermediation in dollars, widening interest rate differentials to depress the return on dollar saving instruments, to encourage investors to move their assets in local currencies, or regulations that can directly also affect the choice of foreign currency as a means of payment or a unit of account. So, for example, legal limits on the use of foreign currency for prices, wages, and other contracts. And we have seen how some of these macroprudential measures and deposit de-dollarization measures have come in place a little bit more recently here in Georgia in 2019 and 2021. So this is some context of the measures that the central bank and other regulators have been putting in place to encourage de-dollarization in the economy. And before I invite our speakers on the stage, I'd just like to get your view here from the audience and to those of you watching us through Zoom on what your view is on how these measures have been put in place so far. So we have a poll which you can vote using the Slido app, and I think you've all been briefed on how to do this, and those on the screen, it will come up automatically. So we have 4 options in this question. What are your views on the policy measures to support de-dollarization? A, they are not bold enough. There should be more drastic measures to support de-dollarization. B, they are too bold. Policymakers should slow down on de-dollarization. Option C, they are on the right course and at the right pace, so keep doing what you're doing. And option D, there should be no measures to support de-dollarization. It's good enough where it is, and we should stop that effort. So let's vote on this, and while everyone is voting, I'd like to invite our 2 speakers to join me here on the stage, and I'll introduce you very shortly. So it's a great pleasure to have with us today two speakers on this debate. They really need no introduction to the audience here, but to those of you watching us through Zoom as well, we have the governor of the National Bank of Georgia, Mr. Koba Gvenetadze, who has been the governor since 2016, so at the very start of those measures, being there throughout, and also with a long career before at the finance ministry, at other ministries in the government of Georgia, and also at the IMF for many years. Very warm welcome. And we also have Alexisvili, who most of you will know in his role as former Minister of Finance in Georgia, and also chairperson of the board and CEO of the Policy and Management Consulting Group, and also with a lot of experience internationally at the UN and at the IMF. So very welcome to you both, and I look forward to our discussion. Let's look at the results of the poll to see what are people thinking in terms of the pace of the measures of dollarization so far.
Maybe they need more time, no?
Do we need more time? Okay, maybe while we wait, we can ask a first question to both of our speakers to say, why is de-dollarization an aim in Georgia? We provided some context on local currency financing, why that is important, but it is something that is a very long process. We saw in the chart before that dollarization in 2004, where the chart started, was around 90% in the case of loans, and just below 90% in the case of deposits. And over a period from 2004 to 2021, it has gone down to 60% for deposits and 51.7% for loans. So it is a process that takes a long time, and we're still quite high at 60 to 51%. It's something that requires a lot of persistence. We'll return to that, but let's focus on that question first. So why is it important? Let's start with you, Koba.
If I may, just very short thank you introduction for organizing this event to EFSA, to GGF, to EU. Whatever Klaus was saying about responsible lending and local funding, local currency lending, it's like music to my ear. And whatever Olaf was talking about, definitely as well, because National Bank of Georgia is very active in greening the economy and sustainable financing. And wherever EU is, it's our aspiration. Also, thanks to EU for this. And so issue of dollarization is something which, unfortunately, is plagued with a lot of misconceptions and controversies in Georgia. Because when we are talking about larization, which we are using for de-dollarization and decreasing, so we sometimes use larization, we prefer this one, but today we can stick with dollarization, is that we think that it's necessary for stable and sustainable development of the economy. It's a long process, but without doing this, it will be difficult to achieve this process. What is often said about dollarization is that dollarization should not be a purpose, but it should be end by its means. And I completely agree with this, because it's not an objective. Objective is sustainable economic growth, long-term economic growth. But what I don't agree with is that we should not do anything in order to de-dollarize. No, we have to do a lot of things about this. And the second part of my response on this, if I may, dollarization, in a way, it's externality. Externality which needs to be taken care of, because this covers even those who have nothing to do with banking, for example. Because when exchange rate depreciate, for example, and there is a need for monetary policy actions, the dollarization, high dollarization is amplifying the impact of crisis or any pressure on exchange rate. That is why it's necessary to take actions, and there is a role for regulator or public institutions to play in this direction. Because otherwise we may see in a short term, for example, the high growth, and good numbers in terms of financial indicators of financial institutions as well. But once the crisis hits, then all these things will be put under the pressure. Those borrowers who have borrowed in foreign exchange but who have income stream in lari will find it difficult to repay the loans. It may pass to financial institutions, and financial institution may pass it to economy. So this high growth, whatever we had with high dollarization, and everybody happy with dollar or euro loans will change dramatically. So, I mean, today's conference is called two sides of the coin, right? So if we are talking about the benefits of foreign exchange lending, this is one side of the coin. And we have to look at another side, which means that it entails a lot of risks.
Thank you very much for setting the scene. So stability and also a means to an end of economic
growth
end,
not an
and
objective.
Development, not an objective
Yes.
in itself. Alexi, your view on the same question. Why larization? Why is there such a commitment for such a long time for this objective?
Thank you very much. First of all, let me start with this greeting to EFSE in Georgia, because I've met and interlinked with EFSE in Balkans, so maybe around 10 years ago when we started working, providing policy advisory service to Balkan countries. So I'm happy that Georgia is also considered as a Southeast Europe, and you know the EFSE also acting in Georgia as more and more. So to continue this discussion that has started already is, again, absolutely. I mean, my point here is that definitely the main goal for us is the economic growth. This is the prosperity of the society. This is the development of the country, and not de-dollarization, larization, or lari itself. So lari itself is a mean. Lari itself does not mean anything unless it serves the development of this country, right? So, and from that perspective, we just need to look at the goal and then clearly define what type of policy measure we need to take to provide this so-called de-dollarization or larization or whatever policy we do, because there are two types of measures, right? One is forceful.
We will move into the measures later in the
because, again, I mean, if you look at that, in general, my opinion about this is that this is not a matter of I myself against of any particular de-dollarization or larization. Of course, I mean, if we can mitigate risks, this is really very good, but the most important one is how we do this, because looking at the particular reports that we just, discussing this, I mean, de-dollarization in other countries, we see that in many cases, and IMF declares that many times, that forceful de-dollarization is counterproductive, and as higher that goes, then that becomes more. Because we may say that, the least dollarized country in our history was Soviet Union, but it doesn't mean the solution. Of course, I'm exaggerating, but still, and North Korea is not dollarized, but this is not a solution, right? So, point is, what is the goal and how we are trying to achieve this goal? This is the most important issue.
Thank you. So you agree that it's about growth, that it's a means to an end, so
That's
not
right.
much of a debate so far, but you hinted that it's about how we do it, so we may have a debate on that. And you said that it shouldn't be too forceful, so let's look at the results to see what people think about how forceful it is so far. If we can put the results up on the screen already, and I have it here on the iPad as well, so I don't know if this is up to date, but it's telling me that 42% of respondents say that they are not bold enough. There should be more drastic measures to support de-dollarization. So let's see if that's your worry about being too forceful doesn't seem to be shared. And
of course.
let's see. 33% say that they are on the right course and at the right pace. So that's congratulations to the policymakers on that. And then we have fewer people thinking that they are too bold and that there should be no measures to support de-dollarization, although we still have 13 or 12% saying that there should be no further de-dollarization. So there is also some people who think they should not be happening at all, which is interesting. So we've spoken about the why, and we've started speaking about the when and the how quickly. So let me press a little bit more on that when question, because both the IMF and the National Bank of Georgia highlight in their publications about de-dollarization that they should follow a gradual approach, and I think you've both hinted at that. So I wanted to ask about your views on what the optimal timing is, because Thinking back to the chart, we saw since 2016, it's gone from very high levels, around 90% in 2004, to 60 to 50% now. So it's taking some time. And my question is, what is the end objective here? Because should it go from 60, 50% to 0%? How long would something like that take? Is the optimal level something like 20%, single digits? What is your view on that? Let's start with you, Koba.
Mm-hmm. First of all, when we are talking about the dollarization, it's a long-term project. There is no question about it. And when we were starting like more active policies about the dollarization, we were saying in the National Bank of Georgia that it's a long-term project because we were asked, so when it is going to happen, exactly the same questions as you are asking. I have to say that giving some numbers in this direction is not always easy because it depends on country situation and on circumstances. Definitely, I should say that there is no objective to have it at 0%. Absolutely no. So there is this concept of natural level of dollarization, which is calculated. It can be calculated in different ways, I have to say. We have calculated, we have looked at how other countries are calculating this, and IMF has also calculated this, and there are some differences, but both indicators show that current level of dollarization in Georgia is much higher than whatever estimates would give, and so these indicators are much below 40% in Georgia. So I think that as a minimum, we have to try to achieve this goal. And then when?
So 40% is the number that you...
Below 40%,
okay.
Definitely. According to our assessment, it's below 40%. So when it should be achieved? You mentioned the examples of Israel, Poland, Bolivia, Peru. We have also looked at experience of Colombia, Chile, many countries, okay? So they, like us, they never had any concrete timing for that because this is continuous process, and sometimes this process might be disturbed with shocks, with some crisis, and during this crisis...
And we'll talk about the COVID crisis
as well.
Yes, and
we are going to also talk about COVID crisis as well. But once we see that risks to financial system and risks to sustainable long-term economic growth are mitigated or are not high, then I guess at some point we can say that we have achieved whatever we wanted. Mm-hmm. But of course, again, it is a continuous process, and we have to look at it. And one more thing to add about this. Usually when people talk about the dollarization, that was this 12%, for example, which says that we should not do anything about it, what they mean is that it results in credit disintermediation. But if you look in case of Georgia, that's absolutely not the case. The credit growth in Georgia has been very high and very healthy. According to our assessment, it's overly high. And it does create some financial stability risk. So as long as, we are checking the water and we are going there, and we see that there is no harm or risk that lower credit growth will impact lower economic growth in the economy. So this is also for us a very good indicator that what we are doing is right. Well, if we are going to see that credit growth decelerates and then it is going to impact economic growth, of course, we are going to think more about it. But so far, we have not seen that.
Thank you. So I'm keeping patience, determination
Definitely.
Towards a North Star that is somewhere below 40%, but also flexibility when crises hit and when circumstances change.
And one more sentence, Dana, because I think it's important, because in the beginning I mentioned that there are misconceptions about it. Because when we started to talk more actively about the dollarization, more actively, because the dollarization was on the agenda of the National Bank of Georgia even before I assumed my responsibilities, some people or agents thought that if there is an issue of dollarization, it means that exchange rate will not move anymore. which of course is not true. And that's why events like this are important to dismantle this kind of misconceptions.
Yeah, we will talk about the exchange rate as well. And let me turn to you, Alexi, now on this question of the when. How, where are we going to? How much patience do we need to get there?
So let me start with the first statement is that I cannot agree with Koba about the targeting any percentage regarding this 40% or any date regarding the dollarization, because I don't think that this is actually proper approach towards that. Why? Because de-dollarization itself should be an externality, right? As he correctly mentioned. That means like we need to focus on something else and de-dollarization should happen itself. This is the most important issue. And what is something else? This is stability. Because why? There is a natural level of larization, right? So in the economy, if you not touch it, there is a natural level of larization. What does it mean? What is it based on? This based on the risks and the credibility of the government, right? So if the risks and the risks are lower and the credibility is higher, then the larization itself goes up. So what we are doing right now, we are artificially, forcefully increasing this larization, so demand in that sense, which does not have any sense, because that creates not proper indications in the economy, that creates some also incredibility, because what does it mean? People cannot understand why we are doing that. And from that perspective, I think that we need to focus on something different stuff, which means like, you know, more stable exchange rate, which is, we have to focus on lower inflation rate, we have to focus on macro stability, and then including fiscal stuff, because I mean, of course, I understand Koba cannot take this responsibility as well. But in general, when I'm saying that, you know, country has to take this one into account, and then externality itself will come. So, and another issue, we are talking a lot about Israel, right? So, and Israel case clearly shows that this is not a case of forcefully doing this and creating some specific regulatory environment, but focusing on fiscal stability and focusing on inflation target.
So you think it will happen by itself if we focus on the other things?
Yes, if we focus on something else, because we need to consider what Georgia is. Georgia itself, and as an economy, is small economy, poor economy, and we need growth. To increase growth, we need investments, and especially foreign direct investments. Foreign direct investment is a really very important source, not only for the financial part, but also for know-how part, because this is the very important issue here to create
but to go
dynamics.
back to Koba's point, these measures have not meant that credit growth has slowed down. So these other areas that also need to be prioritized haven't really been hurt by the process of dollarization.
Yeah, but what we see here is that looking at FDI, that's being declined year to year, right? So like this is the fact. I mean, and then is it the solution in a midterm or long term? I mean, for Georgia, FDI is #1 issue. We need to expand the economy. If we really want to achieve something, we need to expand the economy. We need to utilize all these FTAs, which we have with EU, with China, with our neighbors. So, and we need to continue growing that. Otherwise, I don't think that we can just, target larization or de-dollarization, but, what is it at the end? Okay. This is my question.
Maybe we have the theme for the next EFSA debate to be about how to increase FDI. But maybe. I want to give Koba the chance to respond to those comments about needing to prioritize FDI in other areas. But also, you were mentioning how there should be other priorities also for policymakers and looking at macroeconomic stability, looking at growth. And we are now in a very special moment in time. We are going through a pandemic, through a crisis that has hit the global economy very badly. And de-dollarization measures do require a stable macroeconomic backdrop in terms of stable fiscal outlook, which of course is not within your remit, but is important, and also good communication in terms of foreign exchange intervention. So what are the additional risks that the COVID crisis has put on this process? Because when we look at this chart maybe in 10 years' time, will we notice a blip in the chart because of COVID? How is it affecting it? So respond to FDI and also the COVID question.
On FDI, I definitely agree that FDI is important for the country, but there is no direct or high correlation of level of FDI with exchange rate. If you ask me, actually, it might be even opposite, because if there is a fixed exchange rate in the country or managed exchange rate, I guess, it's my belief as an economist that there will be less FDIs in these countries, because especially for small open economies like Georgia, because there should be ground to have a fixed exchange rate, right? Because fixed exchange rate is like moral hazard in the economy. Once there is a fixed or managed exchange rate in the country, it means that economic agents are taking more risks than they would have otherwise be taking. And also, it's not just like my perception or National Bank of Georgia's conception. It has very strong theoretical background, so-called impossible trilemma, because you cannot have active monetary policy, fixed exchange rate, and free capital mobility. So all this, these things together reinforce the idea that there should be floating exchange rate in countries like Georgia. Now, what it means in case of COVID-19 and what it means, and you also mentioned the chart, right? If anything, COVID-19 pandemic reinforced my beliefs that what we have been doing were absolutely right. And let me explain why. The first time when exchange rates, there was a sort of relatively large exchange rate depreciation in Georgia, it happened in 2014, 2015, partially in 2016, and there were objective circumstances for that. There was no other way to do that. So by the time those borrowers who have borrowed in foreign exchange found themselves in a very difficult situation. So had we continued, had we done nothing about it more forcefully, and I'm not afraid to say this word, but I would say even more market-friendly, and this is what macroprudential measures are about, which very much started to be very active after 2008 crisis. So had not we done this, current 2019 pandemic would have been much more difficult to withstand. For example, if we are talking about physical persons, so back like 7 years ago, we had 174,000, right, David, borrowers in foreign exchange. Now they are at 76, if I'm not mistaken. So these are the people who are contributing to this economy and who found it very difficult to repay these loans, and they had to, and their disposable income became close to zero when repaying these loans. So if anything, times like this reinforce my belief and our belief that we have to be always very adamant on this, and we have to continue. And but why did we do this? Why we thought that it was necessary? Because actually a very good example was 2008, because 2008 and Basel III was a sign that whatever was before just could not have been done before, after. And these changes had to take place. That is why then national central banks embraced Basel III, and it's really necessary to do. Right now, we have all these tools which we can use at different times, and even though it's not popular to implement these policies, let's say very openly that reforms never are implemented with populistic steps, right? Reforms do require unpopular steps.
Well, they are popular from what we saw in the polls, but maybe this is not a representative
it looks like
group.
They are even popular now, but because of and also let's mention responsibilities, right? So, I mean, we have regulatory responsibility that when person goes to ATM machine and puts the cards, then it gets money, whatever is on account. And some people who are discussing about dollarization, definitely I don't mean lecture about it. No, they don't have these responsibilities. And this may happen if there are not enough checks and balances and regulations in financial system, which as of today is highest regulated system in the world.
Thank you, and thank you for touching also on the exchange rate and the impossible trinity, and we will return to that also, so giving you a heads up on the next question. But Lex, over to you on the COVID question. What do you think the impact of that is on the process? Is it fundamentally changing how we think about de-dollarization? Because Koba was talking about Basel III and the 2008 crisis, which was a big moment. And in the pandemic, we're also reconsidering a lot of our structures around the economic system that we have. So is dollarization as an objective fit for purpose in the post-COVID world, or how has it affected it?
So Koba touched many issues, including exchange rate. So allow me also to comment on that later. But let me start with
we'll come back to the exchange rate because I think it deserves its own time.
Exactly. So let me start with the question when, because this is also interlinked with the question COVID-19, because this is the stage where we are standing right now, right? So first is that we are in a really very different environments. I mean, when we are talking about de-dollarization, larization, and all these type of instruments, usually sometimes I have a feeling that we are still trying to solve these issues with the measures which was created in 20th century. And now we are in the 21st century, when there is not only like different circumstances or COVID-19 itself, but digital money creation stage, which absolutely changes everything, right? So these cryptocurrencies and regulatory environment is changing, and nobody knows what is going on there and how we can just, adjust to that point. So I think that at this particular moment, and in any case, from my point of view, the most important one, especially countries like Georgia, small countries with poor economies, they need more flexibility than usual. More flexibility means that whatever is changing in the world, we need to adjust as soon as possible, and we need to adapt to these new realities. So, and when we create some kind of special rules or strict environment, then becomes that much difficult and much dangerous. So, from my point of view, we need to create or find a way how we can be more adjustable or more adaptable than we just, creating some instrument or measures which are coming from last century, 20th century, or sometimes mid of 20th century. And then that's what we had these discussions, not only with this particular one, the dollarization, but also the mandatory pension funds as well. Like, do we need that? I mean, do we need such kind of instruments to create some economic growth? Because we definitely need economic growth, not just these instruments.
Thank you. No, very topical issues that you raised there, also about technology impact. Let's talk about the exchange rate now. Yeah. And also to remind people watching us on Zoom and here that you can also start sending through your questions. I see some are already coming in, and we will have time for those as well. So what are your views on exchange rate policy in the context of de-dollarization? What do you see as the advantages and disadvantages of more or less controlled exchange rate now?
Yeah, I guess Stanley Fischer has put it much better than I would have said. He said that floating exchange rate is the best mean to absorb current account deficit pressure on the economy, because there is no other way, okay? So this very much applies to Georgia as well. Because if we try to defend exchange rate, as I already mentioned, this is by itself a moral hazard. And those signals which are necessary to correct imbalances in economy will not be answered. It means that the risks will accumulate. And when crisis happens, these risks won't be, it won't be just possible to overcome these risks. Lexo mentioned crises. And when 2008 crisis happened, then everybody saw how big problem irresponsible lending was. And of course, many things have been implemented after that. And that's why then Basel III was sort of established and developed. And then we could think that now everything is fine, so nothing is going to happen. We have Basel III, everything in our hands, and no threats anymore. But this crisis has the features that when they happen, they come from a different corner. So it is really difficult to anticipate it. So the same was the same is true for with pandemic, right? Because when pandemic started, nobody expected that this would happen. But what was different from 2008? In 2008, financial system was not able to deal with the crisis, and economies were impaired a lot. That is why it took a long time before growth recovered. And in fact, if you look at the numbers, and there is a lot of research, global growth never recovered to the same level as before 2008 because the hit was such strong on financial system. So now, because all these things have been taken into account, look at the situation in 2021. Because of these exact measures for financial system is dealing with the crisis quite well. In fact, if you look at Georgia, the only sector which was working during lockdowns was financial sector, and financial sector was a locomotive of the growth, and it will be locomotive of the growth. That is why it is important to make sure that we don't accumulate the risks in the country. With fixing the exchange rate, with sort of playing exchange rates that, okay, let's make sure that whatever happens for political reasons, for any other reasons, because it's not popular, and okay, I still don't want to fix because it's too extreme, right? To manage exchange rate with verbal communication, or there are many things said about it, it's just not possible, because when circumstances change, when fundamentals change, and to be even more precise, when country loses, in case of Georgia, about $3 billion US revenue in 1 year because tourism died, and by the time our gross international reserves were, for example, 3.6 billion, you cannot defend exchange rate because it will put you in a much more difficult situation. So again, theoretically, it's impossible trilemma. Practically, it's 2008 crisis and its implications. Whatever we see now, after these adjustments, which was necessary, economy continues to grow, financial system is in a good shape, and I believe that, of course, there is also health component here of COVID, and if it's also overcome, then economy will be able to return economic growth to the previous trajectory or even higher.
So I keep that economic growth is desirable, but it should be tied to fundamentals, and it shouldn't get out of control, because then there is a risk of crisis. And
it is tied to fundamentals.
We should not artificially try to achieve growth. But also just to challenge a little bit what you said about the comparison between the financial crisis, because in 2008, of course, it was a financial crisis, and the difficulty there was to contain it, to not move to the real economy, which was very difficult to achieve. Whereas what we have now is a crisis in the real economy, and the financial sector is, of course, much more prepared to protect itself.
If it had not been prepared,
yes, the Basel measures,
in this case, there will be double shock for the economy.
Yes, the preparation is important, but another key difference is that unlike after the 2008 crisis, where the years that followed were all about austerity, there was quantitative easing, of course, but in advanced economies there wasn't as much fiscal support. It was monetary policy was the only game in town, and you know this much better than I do. Here we're seeing now the EU, the US coming out with big fiscal packages, and that's a big change as well. So it's financial sector better prepared because of Basel and the reforms, but also fiscal moving in and monetary policy not being the only game in town. So there are several differences there, but very helpful remarks. Lexo, now, on the exchange rate, what is your view? We've heard, Koba, about the impossible trilemma, the difficulty of propping up growth and making sure that there is good communication as well and credibility, because growth needs to be credible. What do you think about the exchange rate?
So, absolutely. I fully agree with Koba about this trilemma, and that's what we have. But at the same time, I think that we need to consider that when we started talking about inflation targeting, and that time, we also heard many times that, we don't care about exchange rate. Exchange rate is fluctuating as it is, maybe based on a market, the supply, demand, etc. But in general, that seems, and it is like, you know, okay, but in reality, we realize that exchange rate is a risk. And when exchange rate is a risk, then we cannot ignore it. So in this particular case, we cannot just, you know, say that, okay, we don't care about this and we care about something else, but, you know, not this one. And because that then, especially in Georgia, because Georgia is really very heavily dependent on import, and that means, like, you know, on some extent that's also has an influence on inflation as well. So and that's what we actually at the end what we see is that, you know, the inflation is high, but at the same time we still have some risks related to exchange rate, right? So I understand that this trilemma exists. But what are the solutions? I think that we need to find the solution with consideration that we cannot ignore this exchange rate, which means, like, you know, we need to care about this, working on so-called managing, at this particular case, because, I mean, we can talk about many different models, right? So we had also some preliminary talks with COBA even before, maybe 1 year ago, regarding, for example, a currency board. Is it a currency board good model or not, etc. So I would say that, you know, better to just, you know, examine or explore many different models rather than just, you know, ignore this one and saying that, you know, we don't care about this. Because we need to, at this particular stage, I think that we need managing exchange rate, one. That doesn't mean that this is fixed or this is pegged, because it's not possible at this case, because that is much bigger, even on a level of constitutional agreement, of political, institutional, and legal agreement. Because, I mean, in this case, if we say that, you know, we need to have a pegged exchange rate, that means, like, you know, then fiscal part should take the responsibility, which means, like, very difficult in country like Georgia, because this fiscal discipline in this country is always the challenge, and in this
Unless
case
we put you back in the finance ministry, or if we put COBA back there.
Believe me, this is not about personalities.
We both worked in the Ministry of Finance. We were colleagues. We were deputy ministers of finances back in 2001.
So this is not about the personalities. This is about the overall country development, the political environment. So I think even if we decide that, we need something much higher political, institutional, and legal agreement and decision, rather than just say that, okay, we need stable exchange rate.
Very good. Let's talk now about the how, about the measures, because we saw some examples of what the central bank has done. There is a toolbox that you have to support de-dollarization measures. So is your view that the existing toolbox is sufficient and you just need to use it in more bold ways, as the audience is recommending you do? So you have the PTIs, the LTVs, limits on FX lending. You have quite a lot of tools to use. Or do you think that it should be expanded in some way? And if so, what other powers do you think the central bank should have to do even more bolder measures?
I think that the toolkit which we have developed is quite comprehensive now. So the last one which we did, differentiated approach to reserve requirements in foreign exchange, I think it pretty much completed what we thought would be necessary in order to have enough tools in our hands. And then I want to relate then this question on your remarks, that when we look at the chart of the dollarization, sometimes there are pickups again. So after, like, going down, then it goes up again. And usually this is a time when lari exchange rate depreciates. And that's true. This will be always the case, and there is no question about it. But most important thing is that, for example, even if we put the trend line on this, we will still see this downward trend. So, and why I wanted to relate it with this one. So, I mean, the idea that we should not be too bold goes sometimes, it is interpreted as, for example, during some circumstances, we have to abolish, or we have to relax, or we have to give up on some measures which we took. And this is what I don't agree with. I think that whatever we have, they are very good. And in terms of stress, there is no need to relax them. For example, there was one case, for example, when we reduced foreign exchange requirements, reserve requirements in foreign exchange currency, and there was some rationale for that by that time, but in hindsight, I think that not reducing it by 5%, for example, would have been much better for a medium term and for a long term. So again, to summarize my response, I think we have the tools now. I don't think that we need to invent the bicycle in this direction, and we are always looking at what's happening in other countries. We are part of Basel working group, and we are working, I mean, through IMF, through World Bank, we are always getting updated information if there is anything new in this direction. But again, since we are talking about this toolkit, okay, I think that so this was a time when we actively started use this LTV, PTI, and when you start using it, it's more challenging, it's more difficult. So I guess sort of using it down the road, once it already exists, won't be as challenging and difficult as it sounded before. Because I want to recall that when we were introducing one of the toolkit, I mean PTI and LTVs, some people who are quite knowledgeable in this area were telling us that credit growth would become negative in 2019. So they were projecting that after adopting this, credit growth would become negative, and economic growth from projected 5% would fall to 1.5%. So once we adopted this, what was the result? Economic growth was 5.5%, and credit growth without exchange rate, insulating exchange rate was exchange rate changes was about 14%. So none of this proved to be true.
Yes. I want to bring in two questions from the audience before I move to Lexo, because they are relevant to what you were talking just now. One is on how you came up with a number of 40%, the estimates that you were talking about before, and you mentioned that IMF and that NBG have some models around that. So that's one. And the other about the toolkit is, if dollarization is so wrong, why not prohibit loans in dollar and euros? And that goes back to your point about not being too forceful. But and you said that the toolkit is sufficient as it is, but audience members seem to think that we need bolder measures. So what are your answers to these two questions?
Okay, very good question. And you know that we prohibit, I mean, not we, but it was the authorities. There is a ban on lending in foreign exchange up to 200,000. First it was 100,000 and then 200,000. I think that there can be more done in this direction. I mean, for example, if we also look at developing countries, for example, in Ukraine, for example, household cannot borrow whatever amount in foreign exchange. So, because this is an externality, in order to internalize some public measures, some measures by the authorities are necessary. And again, it comes from economic literature, right? It's not that somebody just wants to do like that. So, I think that one direction could be to prohibit loans for household, and I think that it will contribute.
Is that something we may see coming?
Let's see. I mean, we
leaving it open.
We are open to discussions. Definitely, we are open to discussions about it. But whatever it takes to secure financial stability, economic growth. Okay. So I'm not saying that to secure the dollarization. No, to secure economic growth, stable, sustainable economic growth, and financial stability, these kind of measures will be good. And again, Georgia won't be the only one if we do that. This is one. Yeah. Second, for 40%, when we, so why is this 40%, right? When we looked at some countries, we saw that this was a point when some countries were trying to sort of either stop at this, but then they also saw some difficulties down the road when they stopped at this level.
So it reaches diminishing returns to the measures.
Yeah, but even today, Georgia's dollarization is highest in the region and one of the highest in the world, okay? And these calculations, whatever estimates, let's put it this way, because there can be different ways, show again that natural rate is much lower than 40%.
Okay, and you have a study on your website on how this is estimated for people who want to find out more?
No, we don't have it,
Okay.
but there is IMF paper. Actually, I think it's a working paper.
Okay.
Yeah, but given that we have discussions, we have different forums to discuss it, right? So we discuss it with countries in the region, CCA region, even the larger region, and looks like even after so many things we did, dollarization in Georgia is the highest
Okay,
in the region.
Exo, on the toolkit, and you're not in the central bank, so just from an outside perspective, what is your view on this quickly? Because I want to ask you, there is a question about your comments on FDI that would be good to hear your views on.
Okay. So first is that about toolkit, I just hear the Koba's opinion about this further restrictions or further new tools or measures about the dollarization. So, if this is the approach, they can easily reach much higher targets in the dollarization, and this is much easier, like restricting something and that's it, right? So it's, usually from regulatory viewpoint, this is easy. But I think that the most important one here again is what we are doing. We are just losing the main goal, because on one hand we are talking about Georgia as a hub, financial hub, trade hub, the small country, but, having very active inter-regional communication with our trading partners, with one hand, on the other hand, China, Europe, neighbors, etc. On the other side, we are just, talking about some absolutely irrelevant, from my point of view, tools, which is not, again, serving to further development of the economy and growth.
So would it be
yes.
correct to summarize your view as we can get to growth, which is what matters most,
Exactly.
without de-dollarization?
Absolutely.
Or
That's
that
one.
we will get to growth and then de-dollarization will follow?
We need to focus on growth. We need to focus on
And you think
the
it's
grid.
possible to
And
have
if-
stable growth
yes.
without de-dollarization?
Exactly. That's one. Then the second is that if we definitely need the dollarization, that should come itself. Again, reducing risk and increasing credibility, that should bring this as an externality. So that's one. The second is that, as you correctly mentioned, that again, focusing on growth. And all other particular measures has to be, if we need dollarization, that has to be more encouraging measures rather than forceful measures. That should be encouraging, supportive, whatever, trying to just, apply with the instruments or toolkits, which is absolutely different nature, rather than just, forcefully decide something.
Okay, and a challenge to this view, which has come from one of the questions, because you said FDI is very critical, it's what we should be focusing on. And one of the factors that is influencing the decisions of foreign investors to invest in a country is credit ratings, right? So a foreign investor will look at the credit rating and decide to invest. And in the reports of credit rating agencies, they cite high dollarization as a factor that is perhaps negative in terms of influencing their credit rating. So there does seem to be a benefit to these efforts in that indirectly, through having more favorable, let's say, credit ratings, it can support FDI. What do you say to that?
Absolutely. I agree with these credit ratings, mentioning the dollarization as a challenge. But again, how we are trying to mitigate it, we are trying to eradicate the dollarization, right? The point is that we need to focus on something else rather than just trying to enforce some measures which will artificially or forcefully, let's say, reduces the dollarization. That's the point, rather than just, of course, this is a challenge. We all admit it. But we need to admit at the same time that this is a matter of risk, and matter of credibility. There is the natural level of larization. That's for sure. I mean, we should admit that, right? So the point is how we are increasing it. We can introduce or somehow bring some measures which is more supportive and encouraging measures, rather than just forcefully decide that, okay, we don't need the dollars, or we don't allow consuming loans in dollars, etc., etc. So of course, this is okay. I mean, you can introduce it, but what is it at the end? I mean, does it, in a midterm or long term, does it allow us to really de-dollarize ourselves? I don't think so. Because that creates some other negative externalities rather than the dollarized economy.
Mm-hmm. We talked about the toolkit, but how you use it also matters, and in which sequence you use it also matters. So thinking about the sequencing, how do you think this should take place in terms of starting on the deposit side versus measures that target loans? What is the process there?
Yeah, this question actually fits very well what Lexo also mentioned. So measure, for example, which we introduced, the last one, differentiated approach in reserve requirements, it's incentive measure, right? Because banks have incentives. If they have high larization of deposits, then foreign exchange requirements would be lower. So it is incentive. And on deposit side, that's what can be done, because you cannot really force depositors not to have foreign exchange deposits in the banks, rather than maybe increase reserve requirements so much that it does not make any sense to put it here. And by the way, there was a time when Peru's foreign exchange requirements in foreign exchange reserve requirements were at 70%, by the way. So much, much, much higher than what we have now. But more active sides, which, as Lexo says, it's forceful. Yes, this is forceful, but again, what I'm saying is necessary, is on a loan side. Because on loan side, we can do much more, and we are trying to do it as much as, as market friendly as possible. And in fact, I mean, they are in quite a high correlation with each other, right? Deposit dollarization and loan dollarization. Because if deposit dollarization does not happen, then you cannot have loan dollarization, because quite important part of loans are financed by deposits, which is taken by organizations. So, and that's why, for example, we have this difference, right? Deposit dollarization is higher compared to loan dollarization in Georgia. So I guess they have to go in parallel. And also what I don't share is that dollarization will happen by itself. Dollarization, in order dollarization to happen, of course, first of all, it's necessary to have low and stable inflation. This is one. And it's necessary to have macro stability in the country. But because of the reasons I mentioned for Georgia, when risks like that happened for economy which had a chronic problem of current account deficit, then again comes the issue of foreign exchange flexibility. So once something like that happened, you have to, exchange rate should be adjusted, and there might be a spillover to inflation. So from time to time, there will be spillovers on inflation.
We have a question about inflation. Let me just ask you that, because one attendee is asking, do you relate current high inflation rate to the forced larization measures that the NBG has implemented?
No, absolutely not. I mean, there is no relation, because, for example, inflation can be, for example, what we have now, we have supply factors driven inflation. When oil prices increase.
Yeah, we're seeing high inflation everywhere.
Yes, when sugar prices increase, what the central banks can do about it? Absolutely nothing. So again, but I guess there will be a question about inflation, but what I wanted to say is that yes, macro stability and low and stable inflation is necessary for dollarization to happen by itself. But unfortunately, small open economies like Georgia are exposed to external crisis, and when this external crisis happens, there is a pickup in inflation, and it cannot be guaranteed that there will be always low and stable inflation. That is why some measures to support larization are necessary.
Thank you. To you, Lexo, the question about sequencing, and also we have a question from the audience about how can policymakers increase confidence in the lari, because a lot of the loans and the savings of households are still in foreign currency.
I think regarding this credibility is also related to, again, the measures that we are in general imposing in this country, and overall economic and business environment is also very important to consider into account. So let's, like in your clip that was shown here, one of the textile, probably textile producer was mentioning that, you know, she's just having a loan in dollar because everything she does is related to import and export, right? So that clearly shows that as we are just doing, and again, I mean, this is small economy with more active communication with the rest of the world, and we need to have flexible environment here. So, which means, like, you know, whatever we impose, that naturally creates a risk and creates a cost. So who takes this burden? This is the question, right? So the burden are taken by the businesses themselves, and the burden is taken by the country itself, right? So the point here is, again, go back to your question as well. How do we see that should be, like, you know, the mitigated? The point is that we need to create as flexible environment as possible, and if we are creating very strict rules, that does not allow us flexibility. This is the point. So better to just be as more focusing on, again, on encouraging and motivational instruments rather than just focusing on enforceful or
Thank you. And we could go on and talk about this for much longer. I think we both have very strong views, but we are coming towards the end, and I know you're all eager to talk to each other, and we haven't done that in such a long time. So I will ask each of you one last question. But before I do, I want to pose the poll question once again, to see how people think about the measures now, having listened to both of you. Do we still get the same results, or have opinion shifted? So get back onto your Slidos and vote once again on the same question. You may have the same view as you had before, you may have changed your mind, so let's start doing that. And then while we're waiting for the results, let me ask each of you a final question, because we've spoken about the why, we've spoken about the when and the how. Let's now speak about the what next. What are the next steps in this process? Because there's a lot of measures on the table, reading the IMF FSAP report, reading the NBG's reports on larization. You can develop cover bonds market to improve options for local currency savings instrument for entrepreneurs like the lady in the textile industry before. You can develop hedging instruments such as derivatives, for example. I read that 40% of household loans are in foreign exchange and are largely unhedged, so there is opportunities there to develop hedging instruments. There can be deposit insurance on domestic currency deposits. There may be risks in terms of activity shifting to the shadow economy and shadow markets if it becomes too restrictive as well with the measures. So what are your thoughts about the next steps?
All the measures you mentioned, actually the one we already have, we have deposit insurance. Yeah, we have deposit insurance scheme, and right now the coverage is 15%, if I'm not mistaken, right? Yeah. So definitely capital market development is very important, and it's a very complex issue, and it does not depend on just one area, right? Because we need institutional investors, and I mean, Georgia also, in terms of the scale, usually for countries like this, small countries like Georgia, is not easy to develop capital markets. I mean, covered bonds you mentioned, we are working on the loan. We are almost done with the draft, and I think that's a very good thing, and which means that financial institutions will be able to attract lari resources much better than they are doing now. We are working also on development of hedging instruments. There are hedging instruments. I mean, they are expensive, let's say that. I mean, the price between them is actually the difference between interest rates in lari and in dollars, right? I mean, in foreign exchange. But they are there, and we are working to develop swap forward agreements, and I think commercial banks also need to be better prepared for this. They need some IT systems, and they are working on this. We hope that by the middle of the next year they will have this IT infrastructure, which is whatever is necessary for this. And I mean, in this situation, actually, what is better is sort of natural hedging. Natural hedging, which means that if income is in lari, then loan is in lari. So this is hedging by itself. And before just, I mean, if it's possible, we gave you one more slide. And once and actually before results are depicted, if it's possible to show the second one, because it pretty much also relates what Lexo was saying about.
Yeah, because it's showing the different currency loans.
Yeah, I still want I want the audience also to see. I mean, it's something which we have on our website as well, but it will be pretty much
It will come. It will come.
Okay. Yeah.
We'll come back to that slide, but Lexo, your view on next steps.
So regarding those toolkits, and especially encouraging toolkits, I fully agree that that would be much better to create this one. Also considering into account who pays the bill then, right? So this is quite expensive, and then in this case, how that works. This is very important, and we need to have that into.
So what would you do differently if you were finance minister again?
Again, I would focus on further openness of the economy, further active creating better business environment at attracting foreign direct investments, focusing ourselves on those one and creating more flexible and open economy rather than just focusing on enforcing something not relevant to this one. So let me tell you, for example, when we are talking about capital market development here, Koba absolutely correctly mentioned that there are this is quite complex issue and there are many challenges, right? The first one is the scale of the economy, and this is not only the challenge, but the pipeline because of that is also the problem. The companies are the problem, and we need for that purposes especially we need FDI. And on the other side, exit is a problem, and exit is a serious issue because again we need to open the economy. We need new players in this market, right? Expansion means new players. Coming from our neighboring countries or coming from European Union or whatever. But we need new players. We need further expansion of the economy in this regard. And at the end, I think they again go back to particular measure. You mentioned this 200,000 lari threshold. I don't think this is good policy instrument because that creates more negative externalities than positive one, and that is that on one hand I already mentioned that it creates not proper indicators in terms of the naturalization, but on the other side we see that there are a lot of kind of shadow economy stuff and or machinations saying that someone who wants to still have something in USD, they are just getting more than 200,000 lari. And then they pay in 3 days, and then they still continue in dollars payment, right? So that depends on their risks, their business processing, and their business environment, right? So we need to consider that. Let us allow them to work however they want to work. The most important one that they are successful, they bring additional investments in their businesses and they grow. So our main target should be towards that and not just limiting their activities, right?
Thank you.
This is very important.
Thank you. Final word on the chart, because I think everyone wants to see how the results have differed, so to put them side by side. But
yeah, so I mean, this chart very well demonstrates what it means and what are the risks with so-called freedom of borrow in whatever you want. If you look from 2014, these are restructured loans. So euro loans in euro, in US dollar, are much, much higher compared to restructured loans in lari. And we also talked about 2015 2014, 2015. And if you talk about NPLs, the same situation, right? So because NPLs are much higher in foreign exchange loans than compared to lari loans.
And
so
even the government bond was refinanced in dollar again.
it was refinanced in dollar again. But it's sort of a bit different story.
Yeah.
Rather, if not COVID, most likely it would have been in lari. So again, I mean, when Lexo talks about openness, I think Georgian economy is quite open. I mean, the degree of Georgian economy's openness is quite high. And whatever you mentioned, if you take any of rating agencies like S&P, Fitch, and Moody's, the first thing in our area they highlight is a very high risk of high dollarization. So, okay, we can call it as objective or by means at the end, but it is high. It needs to be addressed. Otherwise, financial stability will be jeopardized, and this will have additional burden to the economy.
Thank you. Let's look at the results now and see how opinions have shifted. So I think you get good marks, Koba. People think that you're on the right course and at the right pace more than they did before. So well done. But also we haven't seen a shift in those who think there should be no de-dollarization. So that's still a persistent percentage there. Very well, thank you both very much. We've named this the two sides of the coin. I don't know what coin we've been thinking about, but there's many more sides than two that we've been touching on. So thank you very much, both of you, for your participation. We've all learned so much from both of you. Thank you.
Thank you.
Thank you.
Dear Danai and distinguished speakers, it was highly exciting, and I would say even breathtaking. Now, to an equally exciting and rewarding part, the official signing ceremony. For this, I would like to invite on stage Borislav Kostadinov, Director at Finance in Motion, Advisor of Green for Growth Fund, to be the GGF signatory today. Dear Borislav, welcome on stage. GGF's mission and on-the-ground impact would be incomplete without Bank of Georgia. This long-standing GGF partner always delivers the state-of-art in everything: services, products, and experience. I would like to welcome on stage Mr. Sulhan Gvalia, Chief Financial Officer of Bank of Georgia, to sign a loan agreement with GGF for USD 20 million equivalent in Georgian lari. Dear Sulhan, thank you. Privilege to work with your bank. Thanks, Borislav. Now, I would like to invite on stage Jasminka Begert, Director at Finance in Motion, the advisor of EFSE, to be the EFSE signatory today. Dear Jasminka, welcome on stage. We have a new member of EFSE family with us here today, TBC Leasing, the institution that stands for what EFSA is about. It is reliable, client-centered, and always ready to support. Let me invite Gaius Gogu on stage, the Chief Executive Officer of TBC Leasing, to sign a loan agreement with EFSA for USD 6 million equivalent in Georgian lari. Many thanks, dear Gaius. Many thanks, dear Gaius. It's a pleasure to work with your institution. With this, thank you, Jasminka. With this, we affirmed our dedication to the important mission of ours to foster impact investing in local currency. Now, I hope that you enjoyed being here with us today, and I would like to enjoy to continue discussions and conversations on local currency over the networking lunch. But before that, to make this truly memorable, please join me in the yard to make a family photo. Thank you very much.